offense wins games. So while you're working through your, in your working years and you're investing much more aggressively, defense wins wins the retirement and having some other strategies in place in case the market drops.
And welcome into your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning. He is president and founder of McIntire Retirement Services. Chris McIntire here with us as always. We always appreciate the time, the knowledge, the insight that you share, Chris, here on your game plan for retirement. And as we do, starting off with the financial tip of the week.
Hey, Peter. Yeah, as we, start to close out 2025, and we're looking into 2026, there's been some new changes with the one big beautiful bill out there, updating some contributions into 401ks, IRAs, all the new laws that have been passed. Make sure you're up to speed on those and up those 401k contributions or Roth 401k contributions, whatever your flavor is. Plenty of opportunities going into 2026, buddy.
Absolutely. Yeah. The amount that we can save has been increased. And as we know, we're underprepared for retirement. So we need to take advantage of every dollar that we have the opportunity to save, invest, and grow throughout our career. And especially, Chris, over 50, you've got that catch up and then the super catch up between 60 and 63 now.
Yeah, absolutely. And I get to take advantage of that as well. Peter's not quite there yet. So
Not
I'm
quite.
looking forward. Yep, looking forward to that. And then my wife is 65 now, so we get an extra $6,000 standard deduction for her.
Now, Chris, next year there is a rule change on those catch up contributions. They must go into the Roth side for higher income earners. Does that mean that essentially every 401k is now going to have to offer a Roth as well?
Well, you would certainly think of it, or think it would. And, we have that in our practice. And because, I fall into that category. And when it's not necessarily high income earners, that threshold's not very high,
Right, right.
where you have to put your extra contributions into a Roth. And look, it's going to be tax free when you retire. So, that's fine. You don't get to deduct the contribution, but down the road, when that money doubles or triples for you in your retirement, then you can pull it out tax free. There's no RMDs, required minimum distributions either.
Well, ladies and gentlemen, in order to know all of the plays, all of the strategies for your game plan for retirement, in fact, in order to get your game plan for retirement put together, the document, the physical plan that you can turn to and that you can follow in order to know that you're making financial progress and achieving those important goals throughout your financial and retirement time span, give Chris McIntire and McIntire Retirement Services a call. That is the service and the value that they offer through this program for listeners and viewers of the show. No cost, no obligation. It is a courtesy service to put your game plan for retirement together for you and with you. All you have to do is get that conversation started by calling 419-332-0532, 419-332-0532. And in the theme of the game plan, Chris, there's offense. That's certainly important, but it's been said that defense wins championships. And today on the program, we're going to be talking about defensive financial moves, protecting what we've built. And I think a lot of people with kind of the jitters and the volatility of the market as of late are concerned with the defense that they might have in place.
Yeah, been a big topic of conversation here closing out 2025, and especially we go back into April when we had that big sell-off there with all the tariff threat or Liberation Day. But like you say, offense wins games. So while you're working through in your working years and you're investing much more aggressively, defense wins wins the retirement and having some other strategies in place in case the market drops, 15, 20, 30%, that you've got another strategy in place, and usually that's going to be a defensive strategy to not derail your retirement dreams. And, as the Ohio State Buckeyes were national championships last year, so they obviously know how to play defense there, my good friend.
And offense as well. Chris, financially, we spend decades in our offensive strategies, earning, saving, investing, building, contributing, growing, dollar cost averaging. But once you're nearing or entering retirement, it really is the defense that becomes just as important. You've got to put strategies in place to protect what you've built and make sure that you don't take large losses. No turnovers in the red zone, right?
Yeah, you're exactly right. Yep, when you get close to the goal line, you certainly want to not turn the ball over and score those extra points. But it doesn't mean, scoring extra points doesn't mean taking extra risk. Getting something on the board there is important. And trying to think of some more football analogies here, but you want to protect your income. That's one of those things. Making sure that your income is guaranteed and structured throughout your retirement. That's why dividends are important, interest is important, annuity income is important, pension income, social security income, making sure those things are rock solid. I think we did the analogy a couple weeks ago that, look, this is the foundation that you're going to build your retirement on, and you want to make sure that that foundation doesn't have cracks in it.
Absolutely. So, key question for you, ladies and gentlemen: what defensive strategies, what defensive moves should you be making now? And are you executing on those? The market's been fantastic for us the last several years. How are you making sure that you retain and protect what we've built and grown? Certainly, as Chris indicated there, income, protecting income, one of the essential defensive moves that you could make. And actually, Chris, recently you did a fantastic segment with Aaron Kennedy. And ladies and gentlemen, you may or may not be aware, but Chris does another program, another segment with another host who not only is much more attractive than I am, but is actually an Emmy Award winning journalist. Chris, she was the former news anchor for WGN in Chicago. Aaron Kennedy, you do a fantastic segment with her on a pretty frequent basis. And those can be found where, Chris? On your YouTube page, on your social medias, on Facebook, and on the website, right?
Yeah, absolutely, Peter. YouTube is probably the most common place that people find us, but obviously we put material out there on our business Facebook page. And Erin used to work out of the Cleveland area as well, so she's got some nice local connections. And I think most people would agree. Peter and I have great radio faces, and Erin's got a much better television face than we do.
As we are talking about solid defensive strategies to help protect, maybe we need to give Social Security a lot more time and attention and dedicate some of our efforts to making sure we're getting the most out of it, not getting it as soon as possible.
Yeah, you're exactly right. And, a lot of people are concerned about Social Security's long-term funding. And, so they want to claim it early so that they don't, maybe they don't get their payments clipped or something like that. And, I would certainly not claim because of that analogy there. You want to claim because it's going to be the best strategy for you over the rest of your life. And, the rational side of me says, they're certainly going to make sure Social Security gets funded, but just like government does, as in divided as it is right now, they usually wait until, they can't wait any longer. And,
Yeah.
we can argue those merits.
12:01 a.m. the day after the deadline might
Yep.
be where we have a kumbaya moment and they actually do something about it. But the further we get toward that time, like the worse and worse our options become, right, Chris? We've not that you and I have the ability to control things that happen in Washington as individuals, but they've got to get on the ball here, so to speak, as we're talking about defense. Important to protect the ball, right? And income is the ball, and Social Security, a huge part of the foundation of the income that is our financial security. So
Yep.
definitely want to make good decisions. If Washington's not, us personally need to make good decisions. And Chris, you spend a lot of time dedicating conversations to helping your clients make the most and get the most out of their Social Security.
Yep, yeah, we certainly do, and nice software that we can utilize and help people make the right decisions. And as we continue this defensive piece on as well, Peter, my mom's in a nursing home, probably not going to come back home. So the cost of long-term care can, seriously derail retirement plans for people, especially that middle class family. The people who are ultra wealthy, they can afford to pay for it on their own. It's that middle class America has the biggest risk. And, many people for some reason just think that, look, we're just going to hope and pray that we don't have to deal with this whatsoever. And, we're not going to, hedge our bets or whatnot. And, they wait until it's too late in a lot of cases. And, it's something I do struggle with. And, we try to help our clients, offering solutions and whatnot. And again, let's go after the long-term care insurance industry 20 years ago when they really, I think probably did a disservice. That's the analogy that I would use. Jacking up premiums, had denied some claims, but we're dealing in the industry in 2025, not 1985 either. So, they know where they went wrong and they've made serious corrections to that. Look, we took care of a dear friend of ours for almost 5 years and about, and she had had a long-term care policy and passed away 2 months before it was done paying out. So, and that was $9,000 a month for over 4 years that they didn't have to sell everything and whatnot to get good care.
So a sound defensive strategy is to address the potential cost for healthcare and long-term care, ladies and gentlemen. And that is an essential part of your playbook and your game plan for retirement. And don't overlook that aspect. Nothing can lay ruin to even a well-built financial plan more than unaddressed long-term care expenses. It's important because long-term care events can destroy a retirement and the financial security and stability of your family. So make sure that you've got a plan for that. Again, we're talking with Chris McIntire. That is part of your game plan for retirement. The offense, the growth that we want to achieve, but as well the defense and protections that you need to put in place. And if you'd like to get your game plan for retirement put together, give Chris a call, 419-332-0532, 419-332-0532. Chris, prepping for taxes, another defensive move. We all know taxes are going to be a cost we must incur, but controlling the tax is a sound opportunity and a defensive strategy.
Yeah, without a doubt, we're closing out the end of the year here, and then we turn ourselves into tax season. Everybody's going to be getting the 1099s and whatnot. And, some questions to bring up to the CPA. If they have some tax planning abilities, if you're walking into an H&R Block office, nothing against them, but they're there to, file your taxes, not to help you do a lot of tax planning. You need somebody that, they might even charge you a little bit extra to sit down and say, look, let's run a 3-5 year scenario here looking at Roth conversions, or how much income can you safely pull out of your IRA account and remain in the 12% tax bracket, given some of the new tax thresholds that we have. That's going to be very, very important. That's kind of what my tip of the week there as we started the show was, being prepared for some of these things. And as we go into 2026, knowing what was the amount of tax that you paid on every dollar that you earned. We call that the effective tax rate. And, what tax bracket did you end up in? 10%, 12%, 22, 24. Thankfully, we're in a very friendly tax environment right now. So make sure you're, doing some extra homework, asking the right questions, of CPAs and tax preparers.
Well, again, talking with Chris McIntire about your game plan for retirement. Chris, I think a lot of people have set themselves up in such a way that the taxes actually work against them in retirement when creating income and when ultimately having to cover healthcare expenses and leaving a legacy behind even. And so we need to plan effectively for that. We need to map out how all of our income is going to be taxed. It's not what you have. It's not what you make. It's not what you withdraw. It's what you get to keep and spend. And that is a tax strategy conversation, ladies and gentlemen, part of your game plan for retirement. If you would like to get that put together, again, give Chris McIntire a call, 419-332-0532. Chris, as we sort of started this program talking about the offense that people have had, investment in the market have gone well over about the last 3 years. 2022 was a little rough, but really since then, we've had a great market, very generous. But I think people are a little worried. So defensive move would be to prepare for market volatility, maybe de-risk, and certainly rebalancing.
Yeah, without a doubt. And when you say, rebalancing a portfolio, let's delve into that a little bit. So, let's say you want to be 50% stocks, 50% bonds based on your risk tolerance. Okay. If you had a good year in the stock market, you may at the end of the year be, 70% stocks, 30% in bonds. So rebalancing would mean shifting that extra 20%, which would be the gains of the market, and put them over into your bond portfolio to help protect them from future losses. So, in a way, you're rebalancing that portfolio. And typically, we do that on a quarterly basis with clients in certain portfolios that we have, like a moderate portfolio, right? That gets rebalanced on a quarterly basis, and then, if the market goes the other direction and your equities go below the allocation you want, then you rebalance, take some money out of bonds, and you're buying at lower prices then as well when you do a rebalance. So that's very, very important, Peter.
Helps reduce volatility, helps lock in gains, helps protect principal. So rebalancing on a regular basis, Chris, not something you'd want to do every day because that actually is counterproductive, but on a fairly regular interval, quarterly, semi-annually, annually, keeping your plan and your investments in alignment is going to be achieved through the process of rebalancing. And a lot of people kind of set it and forget it and fall asleep at the wheel here and are now grossly out of alignment and over risky.
Yeah, and when we talk about risk, we use a lot of bucket analogy. So let's say we've got 3 buckets in front of us, Peter. We got a high risk bucket, a moderate risk bucket, and then a no risk bucket or low risk, however you want to term that. So high, medium, and low. Your high bucket risk is obviously going to be your stocks typically. The low to moderates might be the bond side of things. And then, the safe money is going to be your CDs, your, fixed annuities, your index annuities, cash components and everything there. And, a lot of times we have a, little sheet of paper and we put that out in front of clients, people that are coming in as we're just meeting them for the first time, and say, look, if you're going to allocate your assets here today, how much would you want in each of those 3 buckets? And it is amazing that how out of balance they are just to that initial question typically. So they may say, well, we want, 70% safe and only 30% in the moderate. And then we break down the portfolio and like, well, you're 50% in stocks, and the other 50% gets scattered into the other 2 categories. So, that helps us to help them to understand where they're currently positioned. And most people, in a lot of cases have no idea, or how much income does my stock portfolio spin off in dividends? Most people have no idea.
Yeah. We always appreciate your time, Chris, the importance of planning and the importance of having some defensive strategies, the topic of conversation today and the topic of conversation very often there in your office as you're helping people construct their game plan for retirement.
Yeah, absolutely, Peter. Pleasure to be with everybody today. Thank you for listening, and everybody have a great weekend. God bless America.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Chris McIntire and McIntire Retirement Services are not affiliated with or endorsed by the Social Security Administration or any other government agency.